for. And then let's say that was in 2020 January. And then upon getting to like December 2020, he acquired maybe about 15%. So which makes it a total of what? 35%. At this point in time, it becomes what? Company A becomes what? Any answer from there? Company A will become what? As at the time he owns 35%.
An associate. Associate.
Okay.
Associate.
All right, good. He becomes an associate. So he has a significant influence in the company. And then let's say in 2021, he was able to acquire about 20% again. And then he has 55%. And as at this time, he has what? Control of what? Of the business. So that's what tends to happen. That's what tends to happen in actual sense, oftentimes in real life. It's on seemingly rare occasion, you just see a company acquire or take control of a company in whole. So that's what we are going to look at tonight as we discuss together. All right. But the fundamental principle still stands that consolidation will start from the word acquisition date. So that still stands. Consolidation will start from the word acquisition date. However, when we deal with piecemeal acquisition, we need to take note of goodwill. The way goodwill will be what? Computed. So goodwill will be computed will be computed first, consideration at acquisition date. We now look at the fair value. So the fair value of the what? Equity interest. So the initial investment we had, perhaps at 2020, before we gained control in 2021, what was the fair value of that interest that we have in the company as at the time we took control, and then we can measure what? NCI, and that gives us the fair value of our net asset at what? At acquisition date. So the gain or loss on the fair value measurement, we recognize in our statement of profit or loss and what? Comprehensive income. That's what we have there. Aid, I can see the name, I can see the hand, but to pronounce the name is a problem. So let me say, I think that would be better. Go ahead with your question.
Please explain that fair value of the equity interest before the calculation of the NCI.
Okay.
Thank you, sir.
You're welcome. How do I pronounce your name, please?
My name is Nato. Nato, N-A-T-O-R. Nato.
Okay. All right, no problem. Thanks for that. So what I'm saying is this. In an instance, let's say that I first acquired 15% of the business on 1st of January 2020, and then I acquired, let's now say 40% on 30th September 2020. It means that as at 30th September, I now have 55%, right?
Yes, sir. Yes,
And there I have control. So consolidation will start as from what? 30th September. However, by the time I want to measure my purchase consideration, so I look at what is the value of the 40% which I bought here, which will be my consideration at acquisition. And then at this 15%, it was bought in 1st of January. Then I need to determine what is the value of this 15% as at 30th of what? September 2020.
Okay.
So what does it worth in the business? So that's what we talk of the fair value of the equity interest which you have in the business as at what? The acquisition date. Are you with me?
Yes.
All right. So if you are with me, anyone that is still with me in spirit should help us read question 1. Somebody should help us read question 1.
Question 1.
Yes.
Ola Limited bought 10% of Shadow Limited 2 years ago for 45 million naira. The balance on Shadow Limited retained earnings was 150 million as this date. Due to the good investment opportunity, Ola Limited decided to increase its investment in Shadow Limited by increasing its stakes to 70%. This additional acquisition was made for 540 million 1 year ago. The retained earnings of Shadow Limited was 300 million during that acquisition. Shadow Limited has a non-current asset with a fair value of 150 million, more than its carrying amount. The fair value of the original investment, 10%, was 60 million at this date. The statement of
Continue.
Okay. The statement of financial position for Ola Limited and Shadow Limited as at 31st December 2021 are as follows.
You can skip all of that.
Okay. Prepare the consolidated statement of financial position as at 31st December 2021.
Okay. Thanks so much for the wonderful reading. So Ola Limited bought 10%. Let's begin to dissect the question. You bought 10% of Shadow Limited. So 10% of Shadow Limited was bought for how much? 45 million, right? So as you see that, you can begin to think. For the purpose of goodwill, you need to know let's continue. It was bought 2 years ago, right? Are you with me? So the retained earnings was 150 million. So due to the good investment opportunity, that's our story, Ola Limited decided to increase its investment in Shadow Limited by increasing its stake to 70%. So how many percent more did Ola Limited bought? How many percentage did he buy?
60.
In addition, so he bought 60%. So we need to understand that he's increasing its stake to is different from he's increasing his stake by. I hope we should get that. So just It's just some technicality in the usage of the word. It's increasing its stake to, it's different from it's increasing its stake by. Okay, so that's very important. So it bought 60 additional percent for how much? 540 million, but that was bought 1 year ago. So is it acquisition during the year or at the beginning of the year? So at least that shows that it's not acquisition during the year, it's acquisition at the beginning of the year. That makes life easier for us. So you also held the non-current asset with a fair value of what? 150 million more than its carrying amount. So the fair value of the original investment, this 10 million, fair value is how much? 60 what? 60 million. All right. Having analyzed all of this, I think we are done with the what? With the question. So if you are with me, let us go ahead and and tackle it. Okay. So I can say therefore maybe my workings one. Fair value of net asset. So Adebimpe, can you go ahead with your question? Adebimpe, I cannot hear you, but you can go ahead with your question.
I want to ask that how do we know that the acquisition was during the was beginning of the year, because the date of acquisition was not specifically stated. Just a 2 years.
Interesting. Can somebody help? Anyone? Oh, I should answer my question myself. All right, read one. Go ahead.
Okay, sir. The reason why we know that it is beginning of the year is that it was given year for us that it was made for 540 million 1 year ago. So 1 year ago might actually mean the beginning of the year because it is equivalent to 1 year.
Thank you so much, and that's it. So don't assume, don't let me put it this way, don't be too critical about the words that are used. So it's the examiner said this additional acquisition was made for 540 million 1 year ago. Simple. 1 year ago. All right. Yoruba will say ọdún kan sẹ́yìn, 1 year ago. So 1 year before now. All right, good. So let's begin to dissect the question. So we say, what's the share capital at acquisition? What's the share capital at acquisition? At the date of acquisition, it's 100, right?
Yes, 100.
Okay, which also means at consolidation, we're not told that it has changed.
Yes.
What's our retained earnings? At acquisition. Retained earning at acquisition was what? 300?
100 million.
But
Go ahead.
There are two. There is the balance of shadow retained earnings was 150 million at this date. Maybe the first. Then another retained earning is 300 million. the question.
Let's read the question. Okay. Ola Limited decided to increase its investment in Shadow Limited by increasing its stake. The additional acquisition was made for what? 540 million 1 year ago. The retained earning of Shadow Limited was how much?
300 million.
During when?
During that acquisition.
Okay, good. Now, the 150 million you see there, is at the time the retained earning was 150 million. Has the company been acquired?
No.
No. Ola Limited only has 10%. And if you have 10%, how do you recognize it? In accordance with what and what?
Associate.
If you have 10%,
It's an associate.
You said?
It doesn't have control.
Ordinary business. Investment.
So how do you recognize it?
That is equity method.
Okay. And what are the standards that guide such type of investment?
Okay. The cost of investment plus post investment profit. That is retained earning.
No, tell me under what guides such investment? What are the standards that relate to it?
IS-28.
IS-28 and
IS-28 is what? What's IS-28?
Investment in associates.
No.
Well, 10% is it an associate?
So I think it's IFRS 3, which talks about the combination of the business.
Not at all. I give you that as an assignment. It's one of the standards that a lot of you run away from. Anyway.
IFRS 9.
Okay, I think you are getting there. All right, so you know the one you run away from. All right. So retained earnings, so as at when it was 10%, Ola Limited does not have control, neither is it an associate. So as such, we have the retained earnings at acquisition was 300 million, but reporting date, what was the retained earnings? Reporting date, we check your statement of financial position. What do you have there? 500. Read 500. Read one. I was seeing your hand. Are you still asking a question? Oh, sorry, I wanted to write your name.
No, sir. No, I'm not asking any questions, sir.
All right, no problem then. So I think in the question again, we are told there is one thing. Can somebody spot it out? We are told
fair value of the original investment.
Good, thank you so much. I'm sure you did not sleep in the court yesterday. Thanks for spotting that. All right, so we have fair value adjustment of the asset, and we are told at acquisition it is 150. At consolidation, how much was the value? Or how much is the value?
16. Okay.
What would be the value of this asset? It is still 150. Examiner did not tell you that it is a depreciable asset, so don't go and assume for the examiner.
Okay.
All right?
Yes, sir.
So don't go and assume, why won't they depreciate it now? And then you assume depreciation. It's not in your place to assume what? depreciation. So we know that our post-acquisition reserve, our PAR, what would that be? That would be what? 200. Okay. So well, let's go to our NCI, non-controlling interest. Okay. So what is NCI? Share of net assets. At acquisition. If you are not given fair value of the assets, you automatically know that you are doing what? You are using the proportionate share of what? Of net assets. Okay. So what's the percentage of interest? What's the percentage of interest that that NCI has? No. Ola, we have how many? Ola and Shadow. Ola has 70%. Then NCI has how many percent?
30%.
30%. Good. So we can say 30% of how much?
200.
550 at acquisition. We are looking at share of net assets at what? Acquisition. Are you with me?
Yes, sir.
30% of 550 at acquisition. I think the Naira is quoted in million.
Yes.
And then we have the NCI share of post-acquisition reserve. And that would be what? 30%
of 200.
Of 200. I hope you guys are with me, so that you're not saying that, oh, the video will be recorded. They will send it to us. Because I can tell you that we have technical glitch with the video. So stay with me, please.
So how do you get that 200?
All right, 30% of 550. I think I should know this one. This one is 60 now. 30% of 550 is telling us that would be about
165.
165.
Yeah, 165. 3 times 5 is 15. 3 times 50 is 150. So that gives us what? 200 and what? 25.
25.
Right?
Yes.
So let's move forward to goodwill.
So how do we get that 200?
Okay. I see it.
Okay, thank you, sir.
Okay.
Please, fair value adjustment of 150 is not clear, sir.
This one?
Yes, sir.
Okay, if you move directly to the question, read the question, the last sentence before the fair value. The fair value of the original investment. The Shadow Limited held what? A non-current asset with a fair value of 150 million more than its what carrying amount. So there's already a fair value of 150 million, and we are not told that the asset is a depreciable asset. So we have to assume that that asset was existing even after the end of the year. That's the way we got it.
All right, thank you, sir.
Okay.
Are we done anything with the 60 million of original investment?
Okay. We've not done anything about it, but please, while we do something about it, note something. That idea you just showed now, sometimes can be very bad or not too helpful in the exam, because it does not mean that every figure that the examiner gives you must be used. Okay?
Thank you.
It does not mean that every figure that the examiner gives you must be what? Must necessarily be used. So the examiner can be tricky enough to add an irrelevant or an entirely irrelevant information to the question. So you must be able to say, when do you need it, or when do you not what need it? So far what we've done so far, we don't need that information. But I think as we move forward here, we'll make do of it. All right. So let's get the cost of investment. We can now go to the purchase consideration.
Hello. Hello.
Parent purchase. Hello, are you?
Hello. Yeah.
Are you with us or you're on a call?
Yeah, I want to ask.
Okay.
Sorry, the fair value of having
I'm struggling hearing what you are saying. I'm struggling, seriously.
Fair value being over the carrying amount. What does it imply?
The fair value being
150 over the carrying amount. 40 million over the carrying amount. What does it imply?
Okay.
Does it have any effect?
Does it have what?
Any effect on the fair value net asset?
And that's just the only effect it has. It means that at the acquisition date, by including that statement, it means that at the acquisition date, that 150 million has not been recognized. Oftentimes, that is the tone in which you get it. So by them telling you that only if the examiner otherwise told you that it has been included in the what? In the net value of assets, all right? But if they're silent about it, it is taken as if it has not been what's recognized. Okay, so at the second stage of acquisition, how much was paid? When it acquired is 60%. 540.
Yeah.
Okay. So the next thing we need to do now is to find what's the fair value of the what?
The first.
Of the first 10%, right?
Yes, sir.
And what's that fair value of it?
16 million.
16 million. Examiner might not even tell you the 16 million straight away. It can say, oh, the 10% initially acquired had increased by what? By 50%. You go and calculate the 50%. Or had increased by 10 million. You go and calculate what? The 10 million. So ultimately, the parent purchase consideration is what? 600. Then we gonna have what? The non-controlling interest. And that would be what? How many percent? 30% of how much?
550.
Of 550, which is 165.
Yes.
Gives us what? 765. That's the total purchase consideration. It's as much as my writing is on the screen. It's understanding and to be as explanatory as possible, because the examiner will not go to the market to go and help you interpret what you write though. You need to be sure. Okay.
550.
That's what I was looking at. That. What did I write here? How did I even get the figure in my head? Okay. Any questions so far?
Still on point.
Okay. Then we now look at the consolidated retained earnings. So, what is parent earnings as per question? Question, what's the parent retained earnings?
As per question. It's
2,485,000.
You said?
2,485,000.
Okay, 2,485. Okay. All right. So the share of post-acquisition reserve that would be 70% of 200.
It's 140.
Okay. And that would be 140.
Yes.
Then, was there a gain on the investment previously held in shadow? There is, right?
Yes.
I think if I'm not rubbed it off, I think, okay, I already mentioned it. I said the gain on investment is taken to the statement of profit or loss. Okay, I've rubbed it off. Statement of profit or loss and or another comprehensive income. So the gain on remeasurement of equity. So it was remeasured from what? 60 to what? From 45 to 60. No be so.
yes,
That makes it what?
15.
15. So that in long run, what do we have? Remember, there's no depreciation. So the turn all here is different. So that is 0, 4. That gives me 6. And this is what? 2. 2,000 what? 640. Any other? So I'm sure that this we are still fine. Right?
I'm lost though.
Which street are we going to look for you now?
And the 65, 60 and 45, I don't know where you got it from.
From the question, this is, we are doing the, okay, maybe let me write it well so that we can find you.
Okay.
So the remeasurement of the, let me put it, initial acquisition. So the initial acquisition of the 10% was initially what? 45 million, right?
Yes.
And then as at the end of the year, it became what? 60, or as at the time we acquired, it was what? 60 million. That's how we got it. Okay. Are you saying now?
Yes, thank you.
You're welcome. So let's now prepare what we call the consolidated. Do not forget that this is the question that the examiner is expecting of us. Please, when you prepare that in the exam, write the name of the company first, Then put what you are. So Ola Limited consolidated, Ola Group consolidated statement of what? Financial position, asset, 31st December. Do we have a baby learning to become a chartered accountant? Don't suffocate the baby. 2021. Are you waiting?
Yes, sir.
Yes, sir. You can continue.
So let's start. So okay, so asset. Will I include the investments in shadow that you have there? Will I include the investment in shadow in the consolidation?
We have used
Yes.
it now. No.
Shadow is you can't consolidate shadow because
Okay.
there was no control.
Okay. Another view. Somebody else should give me another view.
Has been acquired already, so we will not include the investment.
Okay. Okay. So anything that deals with more of intra-group will be removed from it. So investment in shadow, because it will be reflected in investment in shadow is as good as it forms part of our equity. Okay, so we do not include that. And that also buys the ground why we will not include what we have in the equity section of what? In the equity section of shadow as well. However, if it is investment in other entities, we can what? We can include it. All right. So let's start other assets. What do we have as other assets? What are the values? 2,500 plus 6 plus what again? 150.
Yes.
That's the fair value adjustment that we did.
Yes, sir.
All right. But the goodwill. Are you with me?
Yes, sir.
And that will give us our total what? Assets. Then we come to equity. We have share capital. Then we have our retained earnings, parent retained earnings. Then we have NCI. Now, this work is 4. This work is 3. Always put your workings number there, okay? Don't assume the examiner will go and look for it for you. Because 1 mark really matters. So are you with me? We have current liabilities, and that is 500 plus 50. That gives us 550. And we have total equity and what? Liability. All right, figures. What do we have as other assets? That's
3,515.
300. 300.
3,300. Goodwill will give me this 2,640.
640.
Share capital is 100. What's goodwill? Goodwill is 215.
Yeah.
That gives us what? 3,515. So this is 2,740. NCI 225. That gives us what? 2965. So 2965 plus 550. 2965 plus 550.
3515.
3515. And I think for that, we are good. Are we there?
Yes, sir.
Yes, we are, sir.
Okay. So let's take the okay. Let's move forward. Purchase of additional equity interest after control is what achieved. So, like what we have here, what we did here, it was from 10%, okay? Then he acquired what? 60 what? %. So what we want to do now is in a case whereby, let's say you've acquired 60%, and then you acquire again additional, let's say 15%. So as at the time you acquire 60%, you already have what? Control. Are you with me? You already have what? Control. But now you're acquiring what? 15%. Okay. That's still, so by acquiring 15%, what do you have? By acquiring 15%, what do you have? You have 60% already. You have control. By acquiring 15%, what do you have?
75% control.
75%. So what level have you moved to?
It's still control, sir.
Okay, thank you. I hope somebody will say double control. So it's still what? Control, all right? So in this case, when it happens, all right, what is only happening is, or let me say there are basically some things that are happening in this case. Well, one, there's just an equity adjustment. There's what we call an equity what? Adjustment, all right? In essence, so we are looking at what is the consideration you've paid and what reduction has occurred in NCI. Because by acquiring more, it's just a trade-off between the parent. It's a trade-off between the parent and what?
NCI.
And NCI. Okay. It's only a trade-off because by implication, as at when it was 60%, NCI was what? 40%. So by now, when it is 75%, NCI will become what? 25 what? Percent. So what was the reduction in NCI at that date of purchase, that is of the purchase of this? We'll let's see it and it gives us what? Our equity what? Adjustment. By the time we look at the question, we will understand, all right?
Okay.
So the reduction in NCI at this date of purchase is the share of the net asset that is given up by the NCI. What's the share of the net asset that is given up by the what? By the NCI. So we'll see how NCI will be presented, but for the consolidated retained earnings, we will have to add the what? Equity adjustment. So this will be added to the consolidated retained what? retained earnings. All right. Let's look at the question. By the time we look at the question, it will explain it clearly. All right. Can somebody read what we have in question 2 for us? Somebody can read question. Can somebody read what we have in question 2? That should be page 2 of the material sent to the group.
Okay, sir.
Assume question 1 to be same, except that on the 1st of January 2022, Ola Limited bought 10% of Shadow for 45 million. The balance of Shadow's retained earning was 400 million at these dates. And we note the statement of financial position remains the same as at 31st of December 2022.
Okay.
Effect of piecemeal acquisition in the consolidated.
No, I don't do. Oh, you are not High Court Justice. I want to read the whole judgment. Assume question 1 to be the same. So what we did before, we are taking that assumption, except that on 1st January 2022, Ola Limited bought what? 10% of 2020 of Shadow for 45 million. And as at the time he bought it, the balance of the retained earnings was what?
400 million.
400 million. Interesting. So let's look at the question and solve. Are we together?
Yeah.
Okay.
Yes, sir. Yeah, sir.
All right, good. So, okay, now, okay. So let me do a kind of a group structure. So, the initial acquisition, when was it made? So we can say as at 1st of January 2021, right? Because what we did was prepared up to 31st of December, right? 2021. Yes. So we could say that Ola Limited initially had 70%, Abby. Now he has acquired 10% more. Yeah, too. So now it's what? 80%. No be so. Good. So I really want to create that picture for, so it's still, so 1st January of 2022, that's when he bought this one. 1st January 2022. This was as at 1st of January 2021. Okay. And then we are reporting. When is our reporting date?
December 31st, 2022.
2022. Okay. So let's go ahead to our fair value of net assets. So So this, we are not talking of acquisition or consolidation date, really. Are you with me? Because he already has control. So it means that he has, let me put it this way, he already has control, he's already consolidating. Are we together? He's already what? Consolidating. Okay. But so that's one thing I want to set clearly anyway. But nonetheless, if it's only, okay, let me put it this way. Okay, assume question 1 to be the same. So let's take for instance that this is the first time he's preparing his consolidated statement. Let's take that for example then. That this is the first time he's going to prepare his consolidated statement of financial position. Okay, so I think that will make me do almost the whole workings again. All right. So I can say that 1st of January, are you getting me? Because I really do not know. All of it is all at. So then at 1st of January this is 2022, 2021. This was our acquisition date, okay? Because this was when control was established. Maybe so. After this date, this was when what? Control was what? Established. And at 31st December 2022, this is our what? Report. Consolidation date, right? Yes. Together. That's our consolidation date. All right. So what's the share capital?
100.
100 across board. Let me. Are you with me? Now, what's the retained earnings? Retained earnings at 1st of January 2022, were we given?
Yes, we were given in the question, which is 400 million naira.
Okay, good. At 1st of January 2021, based on what we did previously.
Yes. So that's going to be 500 according to the question.
That would be 300.
Yeah. 300.
And as at the reporting date, it will be what? 500. I hope we got it. The question has asked us to assume that the statement of financial position we have there remains the same for 2022. Okay. So we have a fair value adjustment, right? Which is 150, which is what? 150. Because the value of that asset has ceased to change, all right? So this is 750, this is what? 550. And this is what? 650. Are we together? Are we together? All right. Yes, good. So let's look at NCI. This NCI share of net assets at acquisition date. Okay. Oh, all right. So We cannot even use that at acquisition date because, okay, because one, we are not preparing the consolidated statement of financial position as at this 31st December. We are not preparing it as at 31st December 2021. We are preparing it as at 31st December 2022. Okay. That's what we are preparing. Okay, so in essence, we will not be able to use this. Okay, that's good. Let's move forward. So, as at the date of consolidation, all right, because we, okay, let me do it this way for you. Let me explain SCI in this way so that we'll be able to have a clearer picture. Okay, let me explain SCI to us. I'll do this. All right, good. Now, what is NCI? NCI at the date of acquisition. At the date of acquisition, right? NCI share of net assets at the date of acquisition. NCI share of net assets. Let me do that style. NCI at acquisition date. So, at acquisition date, what was NCI? 550, right? So that would be, so as at this date, NCI has how many percentage of the business? 30%, right?
30%. Yes.
And that will give us what?
165.
30% of 550 will give us what?
165.
165. All right?
Yes, sir.
Now, NCI share of post-acquisition reserve. Post-acquisition reserve is what? 750 minus what?
550.
Minus 550, right? Based on what we did before. That gives us what?
200.
200 PAR. So that is, and it will also be getting 30% of what?
200.
750 minus 550 for the sake of those who I feel are currently sleeping. So 30% of 200 will give us 60. No be so.
Yes, sir.
All right. Now, so as at the time there was the other purchase, right? Let's now look at it. What happened? What happened to what? NCI, all right? Let's see what then happened. So, as at the time the second purchase was done, that is, the parent acquired 10% more, okay? When the parent acquired 10% more, what happened to NCI?
Yeah, reduced to 20%.
NCI reduced what? To 20 what? Percent,
20%.
okay? Interesting. So NCI had to give up 10% of the its fair value of its, had to give up 10% of the fair value of the subsidiaries what? Net assets. Are we together?
Yes.
He had to give up what?
10%.
10% of the fair value. Oh, sorry, that's 1st of January 2022. That was when the new acquisition was done, right? So you have to give up 10% here, okay? 10% of what? Of what he has there, all right? So that is what I explained here. I think that I noted that. Yes, reduction in what? In NCI. Are you getting me? The reduction in what? In NCI. Are you with me? So we move by saying less reduction in what? NCI at what? At second purchase. And that will give us what?
10%.
10% of how much?
650.
650. That gives us what? 65. Are we together? That gives us what? 60 what? Oh, 65. Okay. So I think we are still on point.
50.
Any question up to this level, please? Any question up to this level? All right. We will now say, we will now include NCI share of post-acquisition retained earnings. Sorry, when I'm doing this long process, I can show you a shorter cut anyway. But for clarity's sake, NCI share of post-acquisition retained earnings from date of second purchase. Are you getting me? So what is his post-acquisition retained earnings from the period he made the second purchase to the date of consolidation? All right.
900.
So that is 750 minus 650. That gives us what?
Now
100. Good. But at this point, how many percentage will NCI be having in the business?
20.
You'll be having what? 20%. All right. 20% of what? 100. That gives us what? 20, right?
Yes.
So that's 165 plus 60 minus 65 plus what? 20. That gives us what? 180. Are we together? Are we together?
Yes, sir.
Good. All right. So
I have a question, please.
go ahead. Go ahead and ask your question.
What is the purpose of lessening the 10% of the NCI at the second purchase?
Okay. That's a nice question. That's a very nice question. What's the essence? All right, good. So as at the time that we acquired control, what was the value of NCI? The value of NCI is 165 plus 60. That's what? 225. Are you with me?
Yes.
That's the value of NCI. So when the parent bought additional 10%, what we're trying to determine is how much did NCI have to give up because, or what did NCI lose in its value because of the additional 10% purchased by what? By the parents. That's the purpose of what? The reduction. So NCI lost what? 10% in value. Get that? NCI lost 10%. So 10% of what? 10% of the time when what? This additional purchase of 10% was what was done. That's what happened there. Does it make sense?
What? Accept. Thank you.
You're welcome. All right. So on. Any question? Any question? Okay, so let's move on based on. Okay, so good. I think we've captured every needful thing for us here. So let's move to goodwill. Okay. Which hand is writing on my board? Which of the gods that are writing on the board? Control the board to somebody else. So let's move forward. Okay, so let's look at goodwill. So what's the cost of investment? And the cost of investment will not be this, it will be, what we are looking at is just as good as what we've done before here, okay? Are you with me? That
Yes,
would be what? The 540, okay? Or it's, okay, in as much we did the first investment there. So 540 plus 60, let me just know that I'm using almost exactly the same figure that I have here. So that's what? 540 at what?
First
At acquisition. So at the initial the initial 10%. How much is that one? That's 45, right?
Yes.
Are we together?
Yes, sir.
That's 45. It's just exactly what we have here. So and we also have
45 or
SCI. Oh, is it 60?
60 at fair value.
We use the fair value. Thanks. That's the fair value. That gives us 600. So we look at what SCI, right? SCI at acquisition. So SCI at acquisition, which would be 30% of 550. Okay. And what's 30% of 550?
Well,
Sir, sorry. Sir.
165, right?
Yes.
That gives us what? 765. And what is the subsidiaries? Fair value of net asset at acquisition.
Sir, sorry, please. What of the 45 in the question?
Just like we did here, the 45 will only be used. What are we going to use that 45 to calculate? We use it to calculate what? Our gain on what? Remeasurement, all right?
Yes, sir.
So as at the time we acquired the company, the value is already what? 60. So note this, even though we are preparing the consolidated statement of financial position for 2022, but you will note that goodwill must have been existing before what? 2022. Are we together?
Yes.
Because the business must start consolidation as soon as what? Control has been what? Established. So what we are only doing is just as good as what would they have done as at the time control was what? Established. Okay. And that gives us what? 2115. Are we together?
No.
Concern.
The concern is about what you just explained about the 45 million. Because
the 45.
Looking at the goodwill that we calculated now, there is no difference between what we did before and what you are doing now.
That's true, because what we are looking at is goodwill, and goodwill will always be computed at acquisition. Can only be determined at what? Acquisition date, not any other date. Okay.
Yeah, but there was also acquisition on January 2022.
But was that the acquisition that gave rise to control?
No.
So what we are looking at, this one is just like an addition, an increase in our percentage holding. It does not change our status.
Okay.
So normally, as at 1st of January 2021, when the company was acquired, right? They would have prepared the consolidated statement of financial position as at what? 31st what? December 2020.
Yeah.
And in that consolidated statement of financial position, goodwill will be what? Existing, right?
Yes.
So, but as at 31st December 2022, will the value of goodwill have changed? No, unless impairment was done, right?
Okay.
So if for now, the examiner has not told us there is impairment, so we need now to compute what would have been the value of what? Goodwill as at what? Acquisition date. Are you with me?
Yes.
We need to compute what would have been the value of what? Goodwill as at what? Acquisition date, which will now reflect in our consolidated statement of financial position as at 31st December 2022.
Okay.
So technically, everything we did here is what we are moving what? Forward. Are you with me?
Yes.
So even when you see NCI 165.60, check what we did here too. We moved from what? 165.60, okay? We are moving it what? Forward. Are you with me?
Yes.
Okay. Perhaps when I modify this question, I never felt like it would be lengthy. But let's move forward. That's the beauty of questions anyway. So we do what we call equity what? Adjustment. That's what I gave you here. That we do what we call what? Equity adjustment. So in the equity adjustment, we want to see, we are looking at what was given up, okay? So what was given up, that's what we are going to look at. So let's continue. When the acquisition or the addition of 10% was done, what was the cost of that investment?
45 million.
It was done at what? 45, right?
Yes.
And now, NCI, what was the interest sold? What was his interest? NCI sold 10% of what? Of 400, right? What we have here? NCI sold what? Oh, 10% of 650, sorry. 10% of 650. Let me erase it. 10% of what? 650. That's what it sold. Okay. That is the reduction in what? In NCI, all right? The reduction in what? NCI. Are you with me? And what's the value?
65.
65, right?
Yes,
So that gives us a negative what? 20. Are you with me? That's what we have as our equity what? Adjustment. It can be positive, it can be negative, it does not matter. Okay? It can be positive, it can be what? Negative. It does not what?
Matter.
It does not matter. Okay, good. Let's now go to our consolidated retained what? Earnings. Okay? That will be our last workings. I know a lot of us are tired. I'm super tired than all of us. That's fallacy of ACTI, of fallacy of what? As per question, what's the retained earnings as per question?
400 million.
To be the same thing we had. 2485, right?
Yes.
We bring in our equity adjustment. Please It's because I'm solving on the board here, perhaps I may not be doing workings 1, workings 2. But when you are solving, Pico, I beg you, always note it. Always what? Note it. Don't let the examiner go and rubbish your work. Okay. After that, what else do we bring into the picture? We bring in what again? We bring in the share of power, but let's quickly bring in this, the gain or remeasurement. The gain or remeasurement, okay? And that is what? 60 minus what? 45. That gives us what? 15. Abina?
Yes, sir.
We now come to share of what? Right? So asset at acquisition date, the share of power will be 200, right? It will be shared at 70%. And acquisition to consolidation, or hold on. Yes. 750 minus 550 is 200, right?
Yes, sir.
Good. Oh, okay. Let me do it this way. Let me do it this way. Let me do it this way. Yeah. Okay, no. Let me do it this way. 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 Okay. All right. I'm saying, okay, this is what I would do. Okay, no, I won't be able to do 200 that way. Oh, okay. I hope that I've not even. As at acquisition date to this period, okay? Acquisition date to this period, okay? Because this is before the consolidation. What is the percentage that the parent has? 70 what? Percent, right? Are you with me?
Yes, sir.
From this period to this period, what's the percentage? 80 what? 80%. I hope this, okay. I have to check what we did in NCI to be sure that we did not make any silly mistake there. So it means that between this period and this period, that's a difference of 100, right?
Yes.
The parent will take 70% of 100, all right? And between this period and this period, that's a difference of what?
200.
750 and 650, 100 again, okay? But the parent will take how much? 80%. Please don't be cautious of the dates, because dates are always confusing, okay? This is 1st of January 2021 when he has acquired it. Up until this period, 1st of January 2022, he only has 70%. So certainly we must have made mistakes somewhere here. Okay, we'll come back there. You only have 70%, all right? Are you with me? You only have 70 what? Percent. And then when it's consolidated, he has what? 80%. Okay? Are we together, please?
Sir.
Go ahead, ask a question. You want to say something?
I thought the 1st January 2021 acquisition date and the 31st December 2022. I thought that's the part you had 70%.
Okay.
And from the 1st January 2022 to 31st December, then we had 80% there. I don't know, I'm not sure.
Yes, now. Now, what we are
Yes.
saying is this. As at 1st of January 2021, that was when he took ownership of the what? Of the company, right? Or when did you took ownership of the company? Okay, you can. Let me do it this way for you. It will still amount to the same thing, all right? But I think I prefer to explain it this way. It will still amount to the same thing, honestly. But I will do the two. Pick the one that you think is simpler for you. All right? Let me do the two. Pick the one that you think is what? Is simpler. All right? So in essence, we'll be saying that as at 1st of January 2021 to 1st of January 2022, the difference, the post-acquisition reserve would have been what? Right? If we have 70% of 100, what is 70% of 100?
70.
70. Good.
70.
And then between this time and this time, 1st of January 2022 to 31st December 2022, that will be 100, right? If we have 70%, okay? 80%, that would be what? 80. No be so. Are you with me?
Yes.
Good. That will be what he will have. Now, let me explain the second logic. It will still give us the same thing, but depending on which approach do you want to go. So if you say 70% of 100, it will be 70, right? Then 80% of 100, it is what? 80. That gives us what?
150.
150. You can also take this approach. It's still the same thing. But now, as at 1st of January 2021 to 31st December 2022, okay? Like what the other person said, that would be 200, right? So then he has 70 of 200, okay? That will give us what?
140.
140.
Now look at he made the additional 10%. He bought the additional 10%, which is 650, right? To the consolidation date. What would be the post-acquisition reserve then? 100, right? But for the 100, how many percentage will it take? It will not take 80%. It will only take 10%. 10%. Are you getting me?
Yes, sir.
It will only take what?
10%.
10%. And 10% of 100 will be what? 10. That gives us what?
150.
I don't know if it makes sense.
Yes, sir.
Yes, sir.
Does it make sense?
Yes, sir.
Okay. I'm
Very
sure
well, sir.
NCI, we must have made one mistake here too, because we should not be using the consolidation dates, okay? Are you with me?
Yes, sir.
That is what, but we'll come and look at it now. So anyone you take, it's okay. Which one should I take? For me, I prefer this. I prefer something that is logical.
Yes, sir.
I don't know which one you prefer, but at least I think I've done the two. You can always pick an option. All right, let me do this very well again. So share of par, we'll say 70% of 100, and then 80% of what? 100. That will give us 70, and then what? 80. I would say 650 minus 550. This will be 750 minus what? 650. We're together. I think that's all about the consolidated retained earnings. I don't think there's any other thing we've not what added. Can somebody sum it up for me? 85 minus 20 plus 15 plus 70 plus what? 80. That's what? 263 what? 0. Are we together? Hello, are we together?
Yes, sir.
Yes, sir.
Good. So this NCI, that's the
Yes,
same
sir.
logic. Okay, ask a question. It's the same logic that ought to work here, which did not. Okay. So let me do that correction. Okay. All right. So here ought to have been 650 minus 550. That would have given us 100. And 30 times 100 would have been what?
30.
30, right?
Yes, sir.
Because that's 165. 30 minus 65 plus 20 will give us what? 150. Okay. I think this you can even check if you are right or wrong. It's simple. To check if you are right or wrong is simple. Just go to, so this is telling us that this will be the value of NCI at consolidation. Okay. It's just simple. The percentage of NCI at consolidation is 20%, right? Just do 20% of the fair value of the net asset of the subsidiary at consolidation. To check, let me give it to you. Check. So you say fair value net asset of subsidiary at consolidation. That gives us what? 750. So what is 20% of it? Because that's 20% yield. That's 20% of 750 will give you what? 150. And that gives you a complete check. So we've used equity adjustment, that's come up there, and we've done the consolidated what? Retained earnings. So I think if there's another thing left, it's for us to just what? Consolidate. Are we together? It's for us to do what? Consolidate. And so NCI is 150. I want to note it down so that I don't come back. Okay. Okay, so I giving this to you as an assignment. Please go and consolidate it. All right. If I say I'm not tired, I'm only lying and deceiving myself.
Okay, sir.
Okay. So let's do the consolidation for this aspect of the question. Okay. While we'll continue with the other question when we meet in our next class. I'll speak to Mr. KABIRU to know if perhaps we can even get one more time during the week, perhaps this weekend, so that we can wrap up that material on piecemeal acquisition. I want that flow of thought to continue, because most likely next week, I will most likely be traveling on that Thursday. So I want us to wrap up that for all. Okay. So please consolidate this and then we'll look at it before the end of the week. Any question, please?
Okay, sir.
Any question? A good number of us are already sleeping. All right, so
basically, if we have questions to do and we don't know how to go about it, that's when we'll now be having questions. But everything you have taught us this night is well understood.
All right, that's wonderful. Thank you. Thank you so much. Really appreciate your time.